What is up, guys? My name is Hassan, and welcome back to my journey in the stock market. This is actually a special video for me because this is my second video in the same week. This is only because I'm on spring break and I just have a little bit more time on my hand. So today I'm going to be giving you guys a monthly update on how my Robinhood portfolio have been doing, and we're currently at $9,300.08. Actually, you can see the market is actually live right now because I'm before 4 o'clock. As always, before I continue, I have to give you a quick disclaimer. As I said before in my previous video, that this disclaimer is more for me than anybody else. I'm not a financial advisor, nor do I know your financial situation. I'm not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. It is just a place for you to start your own due diligence. And even if you want to copy my portfolio, that's totally fine. That's up to you. But as long as you do your own research and hold yourself accountable, because at the end of the day, you are making those purchases. All right. So we're going to start currently one day. I'm up 1%, 1.2 for the week. I'm up 2.5%, which is nice, not bad. For the month, I'm up 7.8%, which is $678. For 3 months, I'm up almost 22%. You can see that there's a nice upward movement, which I like to see because I'm more of a slow and steady versus trying to make quick big gains. So 3 months, I'm up 21.8%. So my number one holding, Baozong, I have 52 shares, currently at $45. Baozong, which is pretty much the Chinese Shopify version. It's a growth company. It consists of almost 25%, which is a lot. I'm not really comfortable with having one company holding 25% of my portfolio. All right, so we're going to go on to my next company, AMD. I think you guys know all about this. It's on various YouTube channels. I have 32 shares. I'm 9.6%. I'm up almost 40%. I'm up 40%, which is amazing. All right, 32 shares of AMD. I'm not looking to add any more shares to this because 9%, I'm happy with that. I'm not going to sell or buy any more AMD. All right, so we're going to go on to HCLP, High Crush. I have 204 shares. My average cost is crazy. I'm actually down by a lot. I'm down. You can see that I'm down by $1,300, which is crazy. The management screwed their shareholders over. So I recommend you guys staying as far away as possible from this company. Don't invest in it. Don't even. I'm waiting. The reason why I'm holding on to this company is because I'm a long-term investor and I think they're going to do well. But I do not recommend you guys buying this though, because it has a lot of risk. Stay away from it. I have other companies in my portfolio that a lot less risky and you might see a better return on. I'm just waiting for High Crush to reintroduce their dividends because currently they cut their dividend. All right, so we're going to go on. Pambina, another monthly dividend company, 17 shares. So if you actually added more shares to this because I want to increase my monthly income, you can see that today, April 23rd, I added 4 shares, 37.45, and then 4 more shares at 37.48. Actually, I bought the first one first. 37.48, it went a little bit more down, I bought more. So I have a total of 17 shares, which is a monthly dividend. So if we look at here, I like using Seeking Alpha because if you go on, they just have their good information laid out and easy. So they have a dividend yield of 4.5%, which pays a monthly, which is a little crazy, this payout ratio of 120%. They're pretty much paying out more than they're making, which is a very bad sign. But I'm pretty sure this company is going to do well. They're going to generate more income and then they're going to reduce this payout ratio to be less. All right, let's continue on. So I got Pembina, 17 shares. It's a pipeline company. So no matter what the oil price goes up or down, I still make money. All right, got Snap. I think they're going to give out an earning today. So 11.97 cents. I have 45 shares. My average cost is still high, 5.79%. I'm not, same thing. This was my growth investment play. The place that I work at is that the kids are still using Snapchat. I asked them, what is their main source of social media? Everybody's still on Instagram, which is Facebook, and Snapchat. These are the top two social medias that all the younger generations are using. So, and I know that means that the company's gonna make more profit, more users, more profit, more ad revenue. All right, we're gonna go on to MU. 11 shares, 5% of my portfolio. I'm actually down 14.42%. Got Texas Instrument, 4 shares. I'm up 22.7%. I actually want to add more to this, but problem is that the price, if you look at it the last 3 months, it's continuing to rise. So I never got an opportunity to buy back at a lower price. Vermilion, another VET, another monthly dividend oil company, oil and gas, 16 shares, 4.5%. So another, take a look at this one, a monthly dividend. And then I got Microsoft, 3 shares. I have about 24% gain on this. So another one, I was looking to buy more, just continuing to rise. Broadcom, I'm also doing well on this also, about 20% gain. So if you look at my portfolio, all my companies that pay a solid dividend are doing really well. All my growth companies aren't doing so well. And I'm gonna touch bases on that, on my transition towards towards a more dividend investor. So Broadcom, 1 share. Waste Management, another solid company, 3 shares, average cost 101. I'm up about 4%. Nvidia, pretty much broke even, 0%. It's 2% of my portfolio. My average cost 191.75. It's at 191.69. International Paper, another solid company. 4 shares. Recently actually made a purchase because they went down below my cost average. So I bought it at 43.99. Pays a solid dividend. Neo, this is a spec play. Stay away from this. I don't recommend you guys getting into this. The price got so low that I just had to buy some shares. So I have 35 shares, average cost at 520. So I don't recommend you guys buying this, so stay far away. Abby, another company I like. I'm a little down by 3%, but they pay us about, how much do they pay in dividends? So they pay about $1.07 per quarter per share. So Abbey Pharmaceutical, 2 shares. Six Flags, 3 shares. I'm up about 4%. and they also pay dividend. JD, another growth play, 5 shares. I'm pretty much down by 3% right here. JC Penney, 109 shares. Average cost, I'm actually down. Another growth play, which I'm down on. So negative 27. Cleveland Cliff, this is actually a swing trade. I love swing trading this. I hold it for a few days, make 5, 6, 7%, and then buy it back as it goes lower. Because if you look at it in the last 3 months, you can see a lot of ups and downs. General Mills, 2 shares, I'm up. Again, dividend play, 25%, 26%, I'm up. Macy's, pretty much at even, 4 shares, but I did collect some dividends, so which is nice. See that on April 1st, they paid me $1.51. Macy's 4 shares. Nokia, this is my 5G play, 15 shares. Okay, Southern, I just recently bought this. I think I bought this today because I need to add a utility to my holdings. Ericsson, it's another 5G play, 5 shares. That's pretty much my holdings. So if you have been following me for some time, you have noticed that I have a transition from me going from a growth investor to a dividend growth investor, or more of a dividend investor. It's mainly because we have been on a bull run for almost 10 years and everyone's saying a crash is coming. It might come. So I just want to be a little bit more prepared in case that crash does show up. That's why I'm making that transition into a more dividend play. As always, I just want to give you guys a quick reminder what investing is about before I end the video. When we purchase a stock, you are purchasing a share of that company's future earnings, steps, and profit. In other words, you are a legit owner of that company. So as always, invest well, invest wisely. As always, thank you. See you next time.